Coming up today on LinkedIn News Live, can money be moral? Private sector investments are increasingly being put to use to solve global problems. We speak with one leader in the field of impact and sustainable investing on this new class of investors linking purpose and profit. Plus, the top 10 relevant brands for 2021, who made the list and why. All of that coming up next. Hello, I'm Devin Banerjee, and welcome back to LinkedIn News Live, where the business conversation begins with you. It's Monday, March 1st, and here's a quick look at the top stories professionals are talking about today. The House passes $1.9 trillion stimulus. The CDC and FDA back a third COVID vaccine. And the 10 most relevant brands in the United States are revealed. Let's take a deeper look into that last story and what it means for those in the industry. Consulting firm Profit released its Brand Relevance Index for 2021, and the results may surprise you. The companies that made the list are representative of brands we look to for comfort and convenience amid this global pandemic. Joining us now to discuss this is Callie Schweitzer, Senior News Editor at LinkedIn. Callie, thanks for joining us.
Thanks for having me.
So Callie, this has been one of the most popular news items on LinkedIn over the past few days. Everyone is taking a look at this list and who made it. Tell us how Profit aggregates this list every year. What are some of the criteria they are looking at?
So Profit, the digital consulting firm's Brand Relevance Index, looks at four things. 1, customer obsessed. 2, ruthlessly pragmatic. 3, distinctively inspired. And 4, pervasively innovative. Those are the four categories that they look at when making this top 50 list.
So let's take a look at who made the top 10. Callie, I'm curious, any surprises for you?
So it's interesting. You mentioned earlier convenience, comfort, trust, and dependability really ruling this list. We look at things like Peloton jumping from number 35 to number 2. There are so many interesting things about this list, looking at Lego and PlayStation. Interestingly enough, Amazon fell several spots, and somebody at Profit tells me that's because they were lacking on inspiration. But think about it. From a convenience perspective, it makes total sense. Some people were asking about KitchenAid being number 3. It's proof of the obsession we've all had with baking as we spend more time at home. A few people asked where GameStop was. The study was fielded in late October and early November, so that was before everything with GameStop happened. But it's definitely going to be interesting to see how this year, as we come out of the pandemic a bit more, life returns to whatever the new normal is, how this list changes.
Absolutely, and I'm glad you mentioned changes. What did this list change more than usual? Do you consider this like a pandemic version of the list?
This definitely feels like a pandemic version of the list. To see so many of these brands from health to play and lifestyle be in that top 10, and certainly the health brands like Mayo Clinic and Johns Hopkins, that was really interesting. Something that really interested people was that Walgreens, CVS, a lot of these health companies that we've certainly relied on this year did not make it into the top 50 at all. That's something that surprised a lot of people.
Absolutely. And Callie, you have your finger on the pulse of the marketing industry at all times. What marketing professionals are thinking and considering for the year going forward. What do you think they can glean from this list?
These companies are customer obsessed. You think about Peloton, it's known incredibly well for the strength of its community. Its community is its ambassadors. And when you think about these companies, you think about people who are passionate about them, people who are inspired by them. You think about Lego increasingly turning to the idea of play for people at home with their kids who just don't want them to be looking at screens anymore. I think this list is going to be fascinating to watch over the coming year. I would definitely keep an eye on these top 10 brands.
Absolutely. And we know that you will keep an eye on them for us and cover this trend going forward. Callie Schweitzer, thanks for joining us today.
Thanks for having me.
That was Callie Schweitzer, Senior News Editor at LinkedIn, discussing the top 10 most relevant brands right now. For more stories like these, check out the news module to the right of your LinkedIn home feed. Or if you're on mobile, click into the search box. Investors are becoming increasingly more conscientious, drawn toward, and putting their money into companies that have positive environmental and social models. But can socially responsible investing be as profitable as other more traditional approaches? Joining us now is former managing director of the Rockefeller Foundation and the author of the new book, Making Money Moral: How a New Wave of Visionaries is Linking Purpose and Profit. Sadia Madsberg, welcome to the show.
Thank you so much for having me on the show.
So it's great to see you again. And your book, Sadia, which I just finished last week, chronicles the rise of what you call, and what the industry is now calling, sustainable and impact investing. Describe for our viewers what that is, sustainable and impact investing.
So there's a very technical definition and description of what sustainable and impact investing is. And it has to do with investment strategies that direct capital towards companies and programs that are, of course, making a profit, but at the same time also doing good for the environment and for society. I mean, but it really is so much more than that. It is about taking money, which is the fundamental building block of capitalism, and putting it to use in a way that creates a better society for all of us. And that's what we tried to capture with the title of the book, which is Making Money Moral. And it's happening in all corners of the world, and it's happening in all corners of the capital markets as well.
Sadia, people have been investing in some form or the other for centuries, probably. The professional money management industry has now been in place for decades, many decades. Why is this a movement that you think is catching fire right now?
So 10 years ago, it was a very niche market, and it counted a handful of investors. And those investors, you would find them, as development finance institutions or philanthropies and some high net worth individuals that were looking to do good. Today, fast forward, 10 years, and we're dealing with a market that's in the trillions, and it counts some of the biggest asset managers and asset owners. And that includes State Street, TPG, Natixis, the Japanese government pension fund, and others as its champions. And a lot has changed in those 10 years. I mean, I also reflect back on when I first started working at the Rockefeller Foundation, and I went to one of these conferences, and I was introduced to a CEO of one of the big European banks. And, I told him what I was doing, and it didn't take long before the conversation shifted over to CSR, so corporate social responsibility, because there was this understanding, well, this is not how banking works. This is not how we do investments. All of that has truly, truly changed. And that has come with a couple of things. At the highest level, I would say there's been an understanding that the way our markets have been organized and the way capitalism has worked, it may have created a lot of economic growth, but it has also contributed to so many problems in society. And at the heart of it, of course, has to do with how do we put our money to use? So there's been an eagerness to look for alternatives way of investing instead of just focusing on the very short-term profit, but long-term value creation for society. But I think the other thing has to do with, and you talked about it before, Devin, that with research and data, there is now an understanding that there's not a trade-off. We're not talking about trading off between doing good for society and profits. You can do both. And actually, if you don't think about these things, you're putting the long-term value of your investment portfolios and profitability at risk.
Absolutely. Sadia, let's say hi to a few viewers in the stream. Ian from Kansas, Diana from Colorado, Jenny from Finland, Dolores from Texas. Thanks to all of you for joining. Remember, you can put your questions in the stream, and I'll do my best to pose some of them to Sadia during the course of our conversation. Arkham in the stream already says purpose-driven businesses and social enterprises are the future. So certainly in agreement there. Sadia, you mentioned that a decade and 15 years ago, this was very niche, and a lot of folks thought about this as philanthropy. Now it has really institutionalized, as you said. And one thing I always hear from those money managers and their clients, those looking to allocate money toward these strategies, is they see the merit in it, they believe in it, but they want to know how it's going to be measured, right? This is an industry that is all about numbers at the end of the day. They want to see a return on that investment. How do you measure the return on the investment in terms of social good, environmental good, governance benefits?
I mean, that is one of the big challenges that the industry is facing, particularly as it's growing. I mean, 10 years ago, when you had to do with a small amount of money, you could develop bespoke frameworks and say, well, we'll be confident that we're doing the good that we're promising you to do. When all of a sudden you're talking about trillions and that money gets traded, how do you even capture that? So impact measurement, both when you can assess early on before you've made the investment whether the potential is there or not, but also to monitor it through the course of the investment, is an area where there's a lot of money that's going in, and new tools are being developed. I would also say at the same time, though, that there's great differences in how the tools are being developed. There's a lot of the rating companies, for example, that have now gone in to develop ESG rating methodologies. If you take a company like MSCI, they have their ESG methodology that's applied to companies as well as funds. If you take State Street, they recently launched something called the R factor. R stands for responsibility, where they take data from a whole host of different sources and methodologies and try to consolidate it down into giving a rating from 0 to 100 in terms of how well that investment or that company is doing.
Yeah.
So there's a lot, but it's complexity. And I think that's one of the things that the industry has to deal with as it goes forward.
Absolutely. I think that's an area all of us will be watching very closely and how that develops. Sadia, you mentioned a few of the players, some very large household name money managers involved in this. Who is doing it well, do you think?
So I think in answering that question, you also have to understand that there's so many different ways of doing it. There are those that have looked into their portfolios and said, I want to allocate a certain amount to making a direct investment in something. And if you take the case of one of the pension funds in Denmark called Pension Denmark, they have for a long time now been looking at building out the renewable infrastructure space with their investment dollars. And most recently, they announced that they're going to help with the development of an artificial island out in the North Sea. It's actually a fascinating project. Anybody who's interested in it should take a look at it. But that's to say, let's build the infrastructure, the renewable infrastructure that's needed to help the transition over towards society where we're not reliant on fossil fuels. You take a completely different example, and it's the Norwegian Sovereign Wealth Fund, which is, the largest sovereign wealth fund, has over $1 trillion that it invests in companies across the world. It has taken an approach where they've said they've collected the companies, the apparel and retail companies that they've invested in, and brought them to the table. And these include companies like Adidas and H&M, to say they want to have a conversation about children's rights in the supply chain, not just as, let's not have child labor in the supply chain, but what does it mean for the children that live in the communities surrounding the factories and the farms, and what can you do to improve those rights? And, the former CEO of the Sovereign Wealth Fund always said that one of the strongest tools that you have as a responsible investor is your influence. It's your voice as an owner. So you can really have deep impact in that sense as well.
Absolutely. Actually, Yngve Slyngstad, the former CEO of that fund, is one of the most fascinating people I've ever interviewed. And he thought very carefully about that sway, that responsibility that he has and that the fund has, being invested in, I think, like 2 to 3% of all equities around the world. They have enormous influence. Sadia, I want to bring you a question from one of our viewers. Wanda asks, how can private sector investments help solve our climate crisis and the many problems that it is creating for mankind? We just heard you mention an example a couple minutes ago about a shift to, helping the shift to a future of renewable energy. What are some other examples? And is the climate crisis really top of mind for these impact investors?
I think climate crisis clearly is the one that has opened up kind of the aperture and showed investors that this is serious. This poses serious risk to their portfolios today and to long-term profitability as well. And because of climate, there are so many of the other areas that are now being taken with a lot more seriousness than before. I think my response to Wanda would be, there are many ways of engaging. And the most important thing perhaps to point to is it's not about saying that there's a certain part of the private sector that creates the problem, and then let's bring in some investment capital to address the problem. a lot of what investors are doing now is saying, let's go in and help the companies that already are up and running and figure out how they can do things better, like how they can reduce the use of plastics, how they can reduce their greenhouse gas emissions. And all of that you do as an investor who has an interest in the industries and the companies. But then you also have examples like Breakthrough Energy Ventures, which is one of the Bill Gates's big efforts in the space, where you've brought together a lot of other people and said, what are the future technologies that we need to invest in today, so that we can capture carbon from the atmosphere and reuse it, or so that we can harvest water in different ways and reuse it. And green hydrogen is a big area as well that everybody is talking about. So driving capital towards these new businesses that are fundamentally going to address the issues is another huge opportunity.
Yeah, absolutely. So many different approaches, as you mentioned. Sadia, my favorite chapter in your book, I have to say, was called Making a Match. And it was about matching money managers with problem solvers. And I was so curious about some of the things that you and your co-author mentioned in that chapter around culture and evolving the culture in this industry. This industry has been, accustomed to doing things in a certain way for several decades now. And today there's this transformation occurring. Does this movement require a culture shift in the industry?
So Judy and I spent a lot of time, both when we were at the foundation thinking about this, but also particularly when we sat down to write the book, because during our time at the foundation, we had a chance to have conversations with investors, but also with the NGO community at the same time, recognizing that sometimes these are two completely different worlds. Now, where we stand today, you'd be hard pressed to find any asset manager, asset owner out there who doesn't talk about sustainable investing in one form or another. We also have to recognize that a lot of these organizations, the financial institutions, don't really come with a stellar track record when it comes to, good for society. So it's not enough to just say we're adopting a new strategy. You have to root out short-termism from your own organization. And that does require a culture shift. I don't know if you had a chance to read the part where we talked about the CEO of the Japanese government pension investment fund, when he was retiring after having underseen a big transformation. He was reflecting on the challenges. And what he mentioned was it was about building the culture of having a long-term view. And, he talked about wanting people that step into the office to care about what's happening in society, not just think in financial terms. So I think it has huge implications for organizations culturally. And I think there needs to be a change in terms of how incentives are set up. There needs to be a change in terms of how talent is cultivated in these organizations, and also how the boards of these organizations run them and make sure that the right capacity and capabilities is reflected even at the board level.
Absolutely. I've seen just in the past several years, as I'm sure you have, the industry attract a whole new slew of talent. Young professionals or people coming out of school who thought in the past, I don't want to go into financial services or investment management because it doesn't do good, quote unquote. And now that is certainly changing, and they see a value proposition for them. Let's say hi to some more viewers in the stream. Patrick from Nigeria. Thanks, Patrick, for joining us. Donna from Massachusetts, Khaled from Egypt, and Jones from New York. Sadia, we've been talking about the role of the private sector here and this transformation that's occurring within it. Let's just touch on the public sector for a minute. Is there a role for government in the success or failure of this movement?
I think there's absolutely a role for government. There's a role for them as a regulator and a policymaker. If we want to have a world where money is put to use for the good of society, you also need to have a regulatory environment that's supportive of it and it's stable. I mean, one of the things that came up as we were doing the interviews for the book was, you need to have an environment that's stable and reliable if you want investors to put their money into a new sector or a new market. So I think there's that. Another thing that we heard, from many of them was there's been so much that's been politicized around climate change, around inequality, that has really taken focus away from the fact that these are areas and issues that are relevant to investors, that are relevant to long-term values. So it's about taking kind of the politics out of it as well, and just looking at the facts and the data. And then one of the other things I would say is, we've come so far as we're, to the point where we are today, because there were philanthropies and because there were governments that went in and funded a lot of the research that was around the frameworks and the tools and the development. We need so much more of that if we want to make sure that this is a sector that continues to grow.
Absolutely. Sadia, as you mentioned, it's becoming relevant to more people. It's relevant to everyone, really, these goals and targets. For the everyday investor watching this, the non-accredited investor, as we say, the person who doesn't have access to more private investments, et cetera, and for that everyday investor who sees the merits and wants to play a role, is there a role for them? Where can they start?
So how our money is invested, whether we have a little of it or we have a lot of it, matters. It really, really matters. And, a starting point, for example, is also just understanding what we have today. And understanding that, this is not just some far removed world of investments that doesn't concern us. A lot of the money that gets invested belongs to just regular people. It belongs to us through pension funds. I mean, I don't know, Devin, if you guys have ever done a survey that around whether people know how much they have in their retirement accounts, of those of us that have retirement accounts, let alone know where it's invested. But I would say, a starting point is just understanding what you have, where you have it, and how it's being invested. And then if you are in a situation where you have capital that you can put to use, so much of it has been democratized through the new platforms and the new products that have been made available. So you can actively go and look for, whether that's an exchange traded fund that has an ESG focus traded, listed on the New York Stock Exchange, or it's a renewable investment trust that allows you to own assets of a wind farm in Europe. There are options, and it's about looking into those options that I would encourage everybody to do.
Absolutely. There are a lot more resources out there, and I'm sure financial literacy will play an important role in this movement. Sadia Arkham in the stream says, it's great to see the narrative moving toward businesses consciously making an effort to generate profit with a purpose. And Dolores in the stream says, I can't wait to read Making Money Moral by Judith and Sadia. So clearly some very interesting takeaways for our viewers today. Sadia, I want to thank you for your time.
Thank you so much. It was wonderful to be part of the conversation.
That was Sadia Madsberg, author of the new book, Making Money Moral. And don't forget to join us tomorrow when we'll discuss how you can beat the social stereotypes that form outside of your own awareness. Stacey Gordon will tell us how and why it matters to the professional world. I'm Devin Banerjee. Thank you again for watching LinkedIn News Live.